Smart routing system. There we go. I was waiting for it to say order filled, and I talked at the same time that it said it. All right, guys, I'm out of the position. So I can do my trade review now for real. Awesome. Hey guys, how you doing? So I'm gonna do my trade review for today. It's a little bit later than usual because I was just hanging out. I took a credit spread trade today. Basically, I was selling options away from the price of the S&P while it was trading. Same day expiry on the options, and I'll show you that real quick right here. If you can see this, you can see 9:47 a.m. and 10:15 a.m. were my entries, and I sold a 3-point wide credit call spread on the SPY. Okay, so my short call was the 265s and my long call was the 268s. And in a way, I don't like my entries on this trade because I sold it and then I didn't cover where I said I was going to cover. Instead, I let the trade go. I got too curious. So that's the thing with credit spreads, is that you can actually get away with this stuff sometimes. And it's like the market can let you get away with murder sometimes, especially since the market is not always going to be in a bull trend day or a bear trend day. Usually the majority of time we'll see a reversal in the first hour of trading, or two reversals sometimes. So that's why I was a bit skeptical of the bulls after the bull rally we had, okay? So I just cut the rest of the position here at 250. That's where we are now, we're 255. And yeah, so you can see that my average price on the trade was approximately $50 per spread, which means that I collected $50 in my account per spread, and I bought them back for $15 a spread here, okay? And those are the commissions paid, $1.29 for each one of these trades, just to show you. All right, guys, so we can go over that real quick. So 947 on the SPY. Let's take a look here. That was near this low, actually. So I was selling calls near this low when I thought that the market was going to reverse lower. But as you can see, I was completely wrong, and that would have been a great time to sell puts because we did see a huge bull rally after that. So I wasn't nimble enough there. Definitely, I was holding the bag, and I was comfortable holding because after I saw this move, this all the way to 263, I said, okay, after a move like that, we're probably going to see at least a 5-minute pullback, and on that 5-minute pullback, I'll probably be able to exit for break even. But we didn't get that for a while. What we got was a tightening range. So you can see here on the 2-minute chart, that SPY, we pulled back and we saw a higher high that got no follow through, and then we chopped around for a while, saw a break to a lower low. So that would have been our two-legged pullback, which got into a two-legged bull move. Again, SPY at the high of the day broke the high of the day by 7 pennies approximately, and then we just chopped around this tightening range, and then we finally saw the bears come in here just after 12 o'clock, and they took it home to the races, because after that, anybody who entered long at the beginning of the day was now getting stopped out. All right, so my call spreads were profitable because the market broke bearish. Now, obviously, if I saw this here breaking the high of the day by 7 pennies and getting follow through after that, if, like, for example, if we just pulled back and started breaking higher, I had to get out of these short calls, like big time, okay? So that's why I don't exactly like my entries for today, because of the fact that I gave too much leeway to the trade, and usually, especially since I'm a day trader, I want to fine tune that a lot more because there's way more room to profit there. But as you can see, there's a large margin for error if you're selling credit in the market, okay? So the VIX is overpricing option contracts right now. So you can take that to your advantage, and you can say, based on the price action and based on what the VIX is implying, which of these options have a higher chance of expiring worthless. So you can choose to sell those options, all right? Same day expiry. So that's pretty much it, guys. Now, I covered the first spread, let's see here, down near the lows. Down here is when I covered the first spread. And then we just kind of chopped around. We're in sort of a 5-minute uptrend now, but it could actually just end up being an hourly lower high again. So we're not really sure entirely of what's going to happen. So that's why I choose to cover the position rather than wait around. Now, of course, I am short the 265s. That's way above the current trading price. So there's a high chance they can expire worthless. But, you know, a part of me just doesn't feel like waiting around here. I'm just going to lock in the profit and come back tomorrow, you know? So that's pretty much it, guys. So keep your risk managed, and definitely I'm going to be focusing on this type of trading more often now. And an interesting thing about this type of trading is that if you have a different currency in your account, you can actually leverage that currency in order to collect US dollars. So basically, My account actually had $22 US today, and my Canadian balance was obviously higher because I had made a deposit. And now my US balance is, hold on, my US balance is just under $100 now. So I'm actually building myself a trading account by selling credit spread. So that's actually going to be my goal. My goal is going to be to build myself a US dollar trading account simply by selling credit in the market. All right, guys. So I wish you a great day. I'll see you tomorrow, okay? Take care. Have a good evening.